ツマンおじ今日のニュースを読みます。Bloomberg Yen weakened despite BOJ hiking rate to highest level since 1995. The Bank of Japan raised its benchmark interest rate to the highest in 30 years and signals more hikes are likely in the pipeline. Yet the yen weakened from disappointment that the messaging from the central bank wasn't stronger. Governor Kazuo Ueda's policy board increased the rate by a quarter percentage point to 0.75% in an unanimous decision, according to its statement Friday. The central bank cited the rising likelihood of its economic outlook being realized and pointed to data showing the solid wage growth moment and the receding risk from the U.S. tariff. The rate changes are expected by all 50 economists surveyed by Bloomberg. The BOJ made it clear that the hiking cycle will continue by asserting that it intends to keep raising borrowing costs if its economic outlook is realized, and the chances of the happenings are increasing. It also said the underlying inflation is continuing to rise moderately. We will keep making appropriate decisions at each policy meeting, Ueda said during his post-decision press conference. The pace at which we adjust our rate will depend on the state of economy and the prices. While market participants were closely watching whether Ueda would give further clarity on where he sees the neutral rate, the level at which the policy rate is neither stimulative or restrictive, the governors continue to say it's difficult to judge where the rate may precisely be. The central bank sees the rate as roughly somewhere between 1% and 2.5%. Of course, it would be great if we can have a better idea of where the neutral rate is, but it's not easy, said Ueda, while noting the current rate was still below the low end of the estimate range. The Bloomberg economist said the decision statement described the rate as at significantly low levels, even as they edged toward the BOJ's 1% estimate for a lower bound of neutral. This suggests the bank now sees neutral as higher, giving it room to tighten further. Taro Kimura, economist. The yen weakened past 157.10 against the dollar after Ueda spoke, suggesting that traders were looking for a stronger message around further hikes ahead. It was trading around 155.80 before the decision. The market was looking for clear hawkish signals, said Masamichi Adachi, chief Japan economist at the UBS Securities and the former BOJ official. Of course, the BOJ said that Japan's real rate is significantly low, and that suggests more hikes to come. But Ueda's comments alone almost sounded like the rate hike cycle could be end soon. Japanese government bond yield rose after the decision, with the yield on the benchmark 10-year bond climbing above 2% and hitting the highest level since 1999. The Nikkei 225 stock average had earlier closed 1% higher. The policy change underscored UEDA's determination keep raising rates as inflation gradually embedded itself into the economy in a major shift from the decades of weakened price. Following the early 1990s bursting of an asset bubble. Earlier Friday, the data showed the key gauge of consumer price rose 3% in November, extending the streak of months at or above the BOJ 2% inflation target to 44. I think the BOJ will continue to raise rate at a pace of around once every 6 months or so, Kajo Momma, a former BOJ executive director, said in Bloomberg TV shortly after the decision. A comment largely in line with market consensus. Maybe 2 rate hikes in 2026 and 1 more in 2027, reaching the levels of 1.5%. While the emergence of monetary easing advocate Sanae Takaichi as prime minister in October raised a doubt about UEDA's leeway to keep normalizing policy. The political cost of continued inflationary pressure and the yen weakness helped ensure that the government didn't discouraging the move. UEDA sought to ensure there's no perception that the central bank is working against the government effort to stimulate the economy. In the policy statement, the BOJ assured that accommodative monetary conditions will continue to support the economy. We've been conducting monetary policy according to our joint statement with the government, the UEDA said, referring to the agreement to seek sustainable 2% inflation established in 2013 that ushered in a period of unprecedented easing under his predecessor, Haruhiko Kuroda. We are not in a final phase of our effort. UEDA raised borrowing costs for the first time since January, following economic data signaling that President Donald Trump's tariff aren't delivering a major blow to the economy. Also, various labor unions have set a target ahead of annual wage talks similar to what they set a year ago, when the process results in historic gains in pay, indicating the wage movement is intact. The market's focus is now on the timing of a future hike, with most BOJ watchers anticipating the pace will be once every 6 months. The action underscored the BOJ outlier status among the global peers as the only major central bank raising rates this year. Last week, the Federal Reserve cuts its rate for a third time this year. Even after Friday hike, Japan's interest rate remains well below its inflation level, while the U.S. borrowing costs are higher than price growth there. The movements show that two rates are converging. This was the first unanimous rate hike decision under UEDA, projecting a united front after 2 of 9 board members voted against keeping the rates unchanged at the last 2 gatherings. Still, 2 of the board's most hawkish members objected to the description of outlook of prices. Both Naoki Tamura and Hajime Takata said the price trend will be consistent with the bank's inflation goal at an earlier stage than outlined. Friday's decision wasn't a surprise after UEDA dropping clear hints for the change earlier this month. The central bank also flagged a likely move ahead of its previous hike back in January. Those actions suggest the central bank are sought to make its messaging clearer after the rate increase in July 2024 caught some investors by surprise and helped trigger global market turmoil. Most BOJ watchers suspected the recent depreciation of yen was a key reason prompting Ueda to drop such a strong hint before taking action. The yen hit its lowest level in 10 months last month, approaching the key threshold of 160 against the greenback and promoting warning from the financial authorities. Takaichi made no explicit attempt to stop the BOJ from the hiking rate this time, with some 98% of surveyed BOJ watchers citing the yen's fall as a likely reason for that. The weak current could intensify the domestic inflationary pressure via a higher import cost, jeopardizing her goals of reducing the hit to a threshold from inflation. Public discontent over soaring cost of living led to Takaichi's ruling Liberal Democratic Party taking major hits in its last two national elections before she took office in October. With a history of political backlash against BOJ rate hikes in the 2000s, analysts will be closely looking at Ueda communication with Takaichi government to forecast in the BOJ path ahead. The BOJ had to run alongside the fiscal expansionary Takaichi administration, said Daisuke Karakama, a chief market economist and Mizuho Bank. The bottom line was that Ueda wasn't able to say something that would clearly increase hawkish messaging. 以上です。